you.
Hello, everyone. Welcome to the South Asia webinar series jointly sponsored by the Leadership, Learning and Innovation Group and the Public-Private Partnerships Group of the World Bank. I'm Shyamala Shukla, Senior Consultant with the World Bank Group Public-Private Partnerships. Today we bring to you the third webinar in this series, and we will discuss the evolution of India's PPP program, its spectacular successes, and some of its failures. Our guest speaker today is Dr. Arvind Mairam, who has had a long association with the PPP program in India. Dr. Mairam has more than 3 decades of experience working on core economic policies and programs. He led the government's infrastructure and PPP policy reform for several years as Deputy Secretary, Joint Secretary, and finally Finance Secretary in the Government of India. I worked with him as his director, overseeing public and private infrastructure regulation, policy, and projects for several years during this time. And those were exciting times with rapid evolution of all the major policies and programs one sees as the basic foundation of India's PPP program and investment policy and sector reforms. Dr. Mairam has been highly visible in international PPP and trade circles, and a lot of you who have been in these fora know him very well. He has worked with the United Nations Conference on Trade and Development, has been India's alternate governor at the World Bank, the Asian Development Bank, the African Development Bank, and India's finance deputy at the G20 and BRICS. A very distinguished career, and I'm glad to have worked with this very dynamic public manager and leader during the most happening times in India's PPP program. Dr. Mairam, a very warm welcome to you. It's a pleasure to have you with us today. We will begin our discussion with a brief look at the evolution of India's PPP program so far.
Thank you, Shyamala. It's a pleasure.
Dr. Mairam, it's very good to see you, and we will begin our discussion with a brief look at what's happened so far. And we've had a number of early successes in India, and as you can see, now I've got the right slide open. There was general acceptance of the PPP policy by the public. There was wide political support. There was rapid scaling up of the pipeline and enthusiastic private sector, and the sheer number of projects which we closed were some of the most positive aspects of the program. And if we have to look at some of the projects, we had 4 prestigious airport projects that achieved financial closure, a couple of metro projects which came a little later but were transformative in their effects, and scores of road projects. And most of these have been running successfully with a few ups and downs. India pioneered the VGF, the IIPDF, and the Infrastructure Finance Company Limited to provide government support to projects. To India's credit, most of the early programs were conceived and developed in-house by its own experts. They were very effective, and these really helped to kickstart the program. To this day, these are being emulated and adopted in countries the world over. Dr. Mairam, to begin with, could you tell us a little bit about the evolution of the program, and what do you think were its most spectacular successes as it evolved?
Thank you, Shyamala. It's a pleasure to be here with you and all the friends who are here on this webinar. I think when you look at India's program and how it evolved, you would see that there was this need for financing, which was the bedrock of this entire program, because India's public finances could not support a very large scaling up of infrastructure in India, and therefore it was necessary to look at other sources of financing. But then, having looked at this one constraint in India's scaling up of its infrastructure program, it was also important to see how we could make it more efficient and how we could make it more meaningful as a service to the people of this country. The success of the program, and I would say what the most important part of the program was, how in the beginning we were able to map out the universe of constraints, what prevents PPPs from happening. And that the mapping of the constraints then gave us a direction as to how we should move towards reform and what kind of reforms are necessary to be able to mitigate those constraints to scale up PPPs. And the reason why we could scale it up very rapidly was because we were able to a great extent, address those issues. And I would like to recap those for you to be able to appreciate what was the most spectacular successes that we achieved. We mapped out 6 inadequacies or 6 constraints for the program in the beginning around 2005-2006. When we looked at the first constraint as inadequate legal and regulatory framework, the second constraint was inadequate availability of long-term finance. The third was inadequate number of bankable projects available to the private sector. Fourth was inadequate capacity in the public sector officials for PPP management. And fifth was inadequate capacity in the private sector to execute PPP projects. And finally, weak advocacy to get the public-private partnership programs acceptable to the consumer or to the people. Now, if you look at how we moved on all these fronts, by 2011, if you look at the economists, the Economic Intelligence Unit's report, the 2011 Infrascope, in the overall score, in global PPP overall score, India was number 4 after Australia, UK, and Republic of Korea, and Japan was number 5 after India. So we had actually moved up the ladder very rapidly in terms of how PPP should be executed. Within the scoring by the Economic Intelligence Unit, what is interesting is with reference to the constraints that I had mentioned, in legal and regulatory index, India was number 4. In institutional framework, India was number 4. And in operational maturity, it's interesting that they called it operational maturity, India stood number 3. So we had actually reached that level because we were able to address to a very large extent the issues that we thought were constraining PPPs in India.
Thank you so much. Yeah, you have very well outlined that looking at inadequacies first kind of led us to our spectacular successes and a string of projects which are running very well even today. And coming to what is happening or what started happening around 2010 and 11, and if you look at the recent years, private investment in the infrastructure sectors has been falling, with a rapid decline in the growth of bank credit to these sectors. I remember last year's economic survey talking at length about the fall in domestic bank credit, the growth rate of domestic bank credit, I should say. And coming to other negatives, I also quote from this year's economic survey, 2014-15. The stock of stalled projects stands at about 7% of GDP, accounted for mostly by the private sector. You have manufacturing there, but infrastructure also accounts for it. Manufacturing and infrastructure account for most of the stalled projects. Changed market conditions and impeded regulatory clearances are the prominent reasons for stalling in private and public sectors, respectively, unquote. Coming to the prospects for private investment, I quote again from the economic survey of 2014-15. Combining the situation of Indian public sector banks and corporate balance sheets suggests that the expectation that the private sector will drive investment needs to be moderated. In this light, public investment may need to step in to ramp up capital formation and recreate an environment to crowd in the private sector, unquote. Further, the economic survey talks about the need for allocation of demand risks to government, less dependence on market wisdom, given some of the aggressive bids, I guess, and also hints at the need to rethink VGF as it is currently, because it sort of ties up the government's hands once you have, dispersed money upfront during the construction phase. And in the light of the host of economic and financing and governance issues that are highlighted on this slide, we had problems of sector exposure limits, single and group borrow limits, and the sector exposure limits hit our, most happening sectors, the energy sector and the road sector, naturally, because there were more projects and more money going in, and constraints in external borrowing. There were a host of constraints which were kind of working on, the companies not being able to go out and borrow more and more. You had currency depreciation, of course, that was kind of confined to a couple of years, and we didn't have, affordable and good hedging instruments, and there were statutory requirements which banks were not able to fulfill, and at the same time, make more money available. But there have been recent developments on this, but these were some of the issues which were highlighted when, things kind of started stalling or stopping. And there were governance issues which, took precedence over financing issues, at least in the, popular dialogue, the public dialogue, and even, dialogue that was emanating from government parties. And these had a little bit to do with the election and the change in government, and it happens in everywhere, I guess, that there's a period when there's a pause. But there were other issues which could have been handled perhaps by India's, officials a little bit better, and there could have been constraints which we did not, quite see from the outside. So, or also was it that the good projects were simply over and you had to look at a second generation of projects which were very different? So looking at all of this, what would you say were the most, glaring failures of the Indian program, and where could we have done maybe a little better? Maybe we could have, you named some 6 inadequacies. So could there have been some more inadequacies which we didn't look at that point, or maybe we were not able to work on those as well as we could have? So what would you say are the most, glaring failures?
Shamla, let me say this. The biggest failure of the PPP program was that it was designed. What's this? You can. Sorry, I think something happened to the lights. The biggest failure of the program was that the PPP design was done at a time when the economic environment seemed perfect. So we did not take into account the cyclical downturns that hit the economy periodically. Of course, the 2008 onwards crisis, which was global in nature, nobody could have predicted. I mean, no country predicted that it's going to hit the global economy so severely, and that is the reason why we found suddenly a program which had been designed to work in the perfect conditions, which means in an economy which was growing at 8% plus every year. There was a lot of finance was available. The foreign exchange was flowing in on account of FIIs coming and investing in the Indian stocks, and therefore we had this feeling that this is something which can never go wrong. I think that design in a laboratory kind of a condition was our failure. We did not anticipate that this design would not withstand the downturns that could happen in the global economy, which would affect the Indian economy. Now, you have rightly said, as you mentioned just now, that after 2008-9, and of course India went also, like every other country went, into the fiscal expansion. as a stimulus to the economy. We went on till 2010-11, but which had other consequences, which you mentioned just now: depreciation of currency, etc., burgeoning fiscal deficit, current account deficit becoming very adverse. Then the global commodity prices, especially oil prices, started rising, and all of this impacted the Indian economy. So PPPs started floundering in this new environment where we had written our contracts, our concessions, we had written in a manner as if for next 30 years nothing is going to change. And therefore that flexibility that ought to have been there in our contracts or our concessions was not inbuilt. So in my opinion, that was the greatest failure in our being able to anticipate the downward cyclical movement in the economy. But if you look at the 6 constraints, and you would see that each one of the problems that you have mentioned here is actually identified there. For instance, long-term finance. Now, long-term finance is a problem because we were not able to have sophisticated instruments for financing of infrastructure projects, because infrastructure projects require long-term finance, whereas their dependence on commercial loans, also inherently forced them to take loans which were shorter term in nature. The debt burden came up front, and therefore, when the economy began to dwindle, they were not able to sustain the debt that they had taken. Equity quickly got wiped out, and therefore they got stalled on one side. Look at the other part of it, which is regulatory in nature. The move towards, if you look at the climate change, global warming, environmental requirements, safeguards. You are sitting in the World Bank. You know as well how the safeguards of the World Bank itself have become increasingly stringent in the last 5 to 7 years or 10 years. And large number of projects that could be done otherwise in the circumstances which existed earlier could not be completed or finished on account of the other requirements which came in, because it's not just the World Bank, but the government of India, which is a democratic government, which is a very responsible government in the global context, was also moving in tandem with every other country in terms of safeguards, global, the requirements of environment protection and so on. So therefore, the projects started getting stuck on regulatory approvals, etc., on account of more stringent and higher norms which were coming in over a period of time. And this, of course, slowed it down. Now, one question that you raised was, could the officials have done it better? Remember, one of the constraints which I mentioned to you was the constraint of the inadequate capacity in the public officials to manage PPPs. Now, capacity building, even though we have a humongous program for capacity building, you would of course know, because you were part of it in the beginning, that we had embedded in almost 20 state governments PPP experts which were taken from the markets, which sat with these state governments in the government of India, ministries, etc., to help the officials in dealing with the PPP, entire universe of PPP, including the contract management. But the capacity building happens over a period of time, and we hit the global headwinds rather quickly after we had scaled up the program. And therefore, if you ask me, could we have handled it a little better? Certainly, yes, the officials could have handled it better. But if you say that is it only on account of the bureaucratic hurdles, then I would beg to differ and say it is not on account of only bureaucratic hurdles, but it's on account of very large number of circumstances which impacted the economy and also impacted the PPP program. Now, you quoted from the economic survey and you said that perhaps we need to now do more public spending to crowd in private investment. I think it's something which is a given. I mean, economic service has only stated something which is very obvious. Right from the beginning, only those projects were to be taken up under PPP which were commercially viable, or could be made commercially viable by a marginal support through a viability gap funding. Therefore, a very large part of infrastructure development, rural roads, rural drinking water supply, rural electrification, etc., was all public funded. So it's not something new that is being said today. The question is, there are much lesser number of projects which may be commercially viable in the present economic circumstances, and therefore the numbers are falling, as you have seen in your own statistics, because the viability of the projects is not as good as it used to be when there was a clear run of 5 years of 8% plus economic growth, and therefore there will be fewer number of PPP projects available, because there are the viability of the projects would not be as good as it used to be earlier. So in the absence of viability of a very large number of PPP projects, public spending will have to be resorted to, and that's a given. So I think what the economic survey has stated is something which is a given, which is understood, and which has always been a part of the PPP program in India.
Thank you, Dr. Mairam. You've very, I would say, comprehensively addressed this question. I do agree it's a combination of factors which was probably responsible for the plateauing and later on, a little bit of a downward trend in the PPP program in India. We have discussed the successes, we've discussed the failures, the evolution of the entire program. Do you think, looking at what the economic survey says in this slide, if you look at the need for change, demand risk to government, emphasis on efficiency, that's very good, less dependence on market wisdom, VGF may not be right, and renegotiations should be accepted, all very well. Given all of this, what do you think would be the future of PPPs in India? Do you think the government now runs the risk of going over to the other side, overemphasizing a few failures, and instead of a case-by-case approach, which is perhaps the hallmark of more mature PPP markets, as I said, do you foresee more of the straitjacketing and standardization, but going now in a kind of different direction? Given what you have discussed, what would you say are the future prospects, and also what key changes do you now foresee or perceive in the future program?
I would certainly agree with you that there always is a danger, especially the democratic polity, of overemphasizing a few failures or some failures to quickly move into something different or something else. I believe PPP program is robust, but it needs to be fine-tuned. It has to be made more sophisticated. I think we have gone up the learning curve rather steeply because of this crisis, and therefore we are now in a position to, based on our learnings, make the program more sophisticated, and a lot of it has or is being done already. So I would say that we are already, this, as I speak, in the last 2 years, and it is continuing today, the government has been working very hard to address some of the issues which have arisen because of the changed circumstances. Now I would say, before I come and say what needs to be done in the future, let me just share with you a few things that have been done, which will give it a right perspective in terms of how we have handled these issues today. For instance, on the long-term finance, on the problem of bank financing, on the issue of overexposure or group exposure or sector exposure, etc., there was a need to find alternative sources of financing, and we had come up with what we call infrastructure debt funds. And these infrastructure debt funds have been notified. They can be either as a mutual fund or they can be as a non-banking finance company. And these are the ones which can move in, buy out debt, stretch the debt, make it longer. And once the IDF buys out the debt from a bank and restructures it, it does not fall within that definition of a non-performing asset. It is not seen as restructured in the classical banking sense, and therefore there is an exit route for the banks to come out of it, to clean up their balance sheets, while as the IDFs can stretch the loan, make the 8-year or 10-year loan into 20-year loan, and therefore also improve the viability of the project. And this is already on ground. The large funds have already been set up. Many of them have gone beyond 150 to 200 million dollars in the last 1 year, and they are now beginning to take out finance from the banks. And this is one area which has been clearly done. In the year before last budget, we had announced the setting up of REITs and InvITs, and in this year's budget, further cleaning up has been done on that. Now these are investment, the business trusts, and InvITs is a new modification we have done in India of what was classically the REITs, the real estate investment trusts, which were known in Hong Kong and Singapore and some other countries, even in UK. These have been modified slightly to take into account the nature of public-private partnerships, and they have been notified, tax pass-through status has been given to these trusts. Now what these trusts can do is to pool in finances for long-term infrastructure projects, and then again they can infuse new equity, they can also infuse debt into the projects, taking them outside the ambit of the banking finance. And these are long term, so 20-year, 30-year finance can be drawn in through these business trusts. So we have already addressed these. We are also addressing the renegotiation of contracts issue. And in renegotiation of contract issue also, we have looked at where the stress is coming from, and depending upon where we can assign the reason for the stress, whether it is on the public sector or the private sector, renegotiation is being done on terms which is on case-to-case basis. And therefore, in the road sector, if you see, very large number of projects are now being renegotiated so that they can actually restart and go on. In fact, the other thing that has been done is in terms of the equity takeout. Earlier, if you recall, in a PPP projects, the lead sponsor of a PPP in the private sector side had to remain with the project for the entire life of the project. Now we are allowing them to sell their equity after the construction period is over. They can exit this, and this actually is going to make a lot of difference. I think what is now going to develop is facility management companies in India, which did not exist till now. And the developers who are good, whose core competence lies in the construction, will then take the risk at the construction period and then exit, and the facilitation companies will come in. So this also is now possible. These changes have been made. So if you look at even banking norms, the Reserve Bank of India has notified what it calls 5x25, which is actually a loan can be extended up to 25 years for the infrastructure projects. So a large number of these changes have already been done, and we will see the impact of these in the coming 1 to 2 years, when we see a large number of projects coming out of stress situation, the financing for them improving, and so on. Now, when you ask me how do we go forward, what do we need to do? In my opinion, I don't think giving up VGF completely is going to be productive. What we need to do is fine-tuning of VGF. I mean, there can be different types of VGF which can be given. And there would be some projects where it would be necessary to give upfront grant, but there could be also other projects where you could come into any period during the concession. You could, the government could come in as and when stress develops in the project to provide the financial assistance, not necessarily during the construction period. It can also be that the government can provide as a soft loan rather than a VGF in the stress period, which is returned by the project sponsors as the project becomes better. This year, if you recall, Government has also announced a setting up of an infrastructure fund. Although we don't know how it will shape up, what is going to be the shape of it, but I seriously believe that if it is done in the way in which the TARP was done in the US, where this fund actually takes over the equity of companies, of the SPVs which are running PPP projects which are stressed or stalled, nurses them back into health, and then sells the equity at a premium. If the fund is used in this manner, I think it would again be of tremendous value in the present circumstances to bringing the PPPs up back and running. We believe there will also have to be more of guarantees that should be available to counter guarantees, etc., to improve the credit rating of the SPVs which are doing the projects or implementing the projects, for them to be able to go into the market and raise money from the bond market, which is not happening today because they are barely at the investment grade. So that those kind of credit rating improvement measures should also be improved. I think the other thing that will have to be done is the concession agreements that we have made, model concession agreements, are very rigid, and therefore they don't have much of a scope in renegotiation. I think right from the beginning, because no one can look into a crystal gaze and say how next 30 years will be, the renegotiation tool should be sharpened. We must make a more informed and perhaps a little more sophisticated model for testing stress in projects, and then we should have the triggers within the concession agreements or the contracts that we sign in PPPs to be able to renegotiate them during the time of cyclical downturn. I think if we move in those directions, I think the PPP program can come back to health, and we would see some good results on that count.
Thank you, Dr. Myram. We did see a lot of changes and a lot of new decisions in the last couple of years, and we hope, as it always happens in public policy, you see the impact of those decisions with a little bit of a time lag, and we hope that with an improving Indian economy and GDP growth rates, which have looked up recently, and the falling oil prices also, we will see a really good growth or a re-emergence of India's PPP program, which seems to have taken a pause. We will now open the session for questions, and we have a number of questions which were sent earlier while registering, and also in the chat box we can see a lot of questions actually. And we'll begin with the first question. Anand Rajaram from the World Bank. He, referring perhaps to your mention about World Bank safeguards and how they impeded projects. He asks, how does the potential emergence of the Asian Infrastructure Investment Bank affect expectations about the approach to safeguards? And do you think it will solve the problem? Will they be seen as less stringent than what has been seen with the World Bank?
I don't know how they will see it, but I certainly believe that these new banks, as well as the existing MDBs, must move towards a country audit system, which means that they should audit the country's regulations or country's policies in the broad framework of the safeguards that these MDBs believe are important. And then if the country's systems are in line with what is, they cannot be identical, but they can be broadly in line with the principles of safeguards that globally are acceptable or accepted, then country system should be accepted. This whole idea of one shoe fits all, I think, is counterproductive, and it doesn't really help in getting growth or development back on the agenda.
We have another question, which is something we haven't referred to in this, but I do know you were working on PPPs in the education sector, and I guess a couple of years ago, and we have a couple of education PPP projects, I think, in Rajasthan. So Rachel Cooper from Washington, D.C. asks, are there any emerging models of PPPs in the education sector?
There certainly are. In the education sector, there certainly are several models that can be looked at. In India, we have tried this model, which I think is a robust model, which is what you mentioned just now, which was first looked at in Rajasthan, which we call Gyanoday. This model, of course, is takes into account where the land is given by the state government. The specifications for the school are given by the state government. The qualifications of the teachers is also given by the state government. 50% of the seats are reserved for what we call sponsored children who come from the economically backward sections of the society, which is at a fee, which is at the government school rate fee, and 50% of the fee is left to the private partner to charge from open market students. And therefore, two things happen. One is poor children get good education. They get the same education as those who are better off. The service provider ensures it's good education because the 50% of the paying population actually is demanding population. So there is a market check on quality, and this kind of a program can actually work very well. Of course, a very simple vanilla program which is not so sophisticated is the education coupon program, where private schools are given their fee is paid by the government for a certain number of seats for the poor students. But I think the earlier one which I spoke of is a model which can actually be scaled up and which can actually give quality education to those who cannot otherwise afford it.
There's another question on the Indian health sector. Pavan Kumar asks if you could talk about what's been happening in the health sector PPPs in the past, what's happening now, and what do you think will happen later on?
On the health side, the components of health have done very well as PPP. For instance, ambulance service or rural ambulance service or diagnostics. These components do well because services can actually be listed, their pricing can be listed, and the performance requirement can easily be verified. There is a bit of a challenge when it comes to running of hospitals through PPP, because there the question of performance or deliverables becomes a little more challenging. You have outdoor patients, somebody has a viral fever, somebody has cough and cold, etc. Somebody has a more difficult problem. So the pricing for each of these services, for each of the specialists, etc., would be very different. Listing each one of that out, ensuring that the kind of service which is supposed to be provided to them is provided to them by the hospitals, etc., becomes a bit of a difficulty. But in terms of medical college, which is attached to a hospital, one of the PPPs being tried in the state of Orissa, we still have to see how successful it will be, but it is at the moment work in progress.
We have a question on standardization. Standardization was actually one of the fundamental, pillars of the Indian PPP program, the early program basically, and you have referred to the rigid contracts. Edwin Gonzalez asks, has standardization helped to create a more uniform market, lower transaction costs, and make a more streamlined procurement process? What would you say about those? We have the RFP and RFQ, standard documents. We have a host of sectors where we have a standard contract documents, and a lot of other procedures and documents have been standardized for easy use. What do you think? Has this helped?
In an emerging country like India, and I think it would be in emerging economy like India, and I think this would be true for other developing countries also. The capacity, as I mentioned earlier, in public officials to manage the entire PPP process even before the contract is signed is difficult, and the capacities are symmetrical. You may find some very good capacity in some areas or some governments or in some parts of the government, but in other parts it may not be that good. Now the question is, for instance, if you have to write, even for a road projects of 100-kilometer road, which may be maybe $100 billion of 75 million, 150 million dollars worth of a project, how to write an RFQ or an RFP, or how to do evaluation of these, or how to write a contract document. This kind of sophistication is difficult, and therefore to leave each one to do their own bit can lead to a lot of confusion, also problem, and also the public officials may be worried about accountability issues, because if they miss out something even out of ignorance, it could be seen otherwise. So model documents really help to a very great extent in speeding up the PPP processes, because you have model RFP document, you have model RFQ document, you have evaluation criteria laid out, you have performance standards which are written out upfront. So if all of this is available, then for public officials to run through the entire transaction is faster and quicker. So it has a lot of value. But as I mentioned to you now, if we make it too rigid, which means if it becomes like a Bible, once written cannot be changed kind of thing, then we run into a problem that we have run now, where you find that the events overtake the contracts, but the contracts cannot be changed or renegotiated or modified because of the problem of its rigidity. So whereas we should have model contract documents, but I think a lot more flexibility needs to be imported into it.
Right. Yeah, I was speaking the other day with some practitioners from Australia, British Columbia, very mature PPP markets, and they do bring fewer and very different types of PPPs into the market, and at a lower rate than India does. But then I spoke about standardized contracts. They mentioned they do have standard clauses. They don't have an entire contract document which is standard, but they do have standard clauses, and with each project they keep refining these, and where there are similar projects they might use these standard clauses, but these are not the Bible, or it's not as if you can't change it, or if you change it you have a longer period of approval process or things like that. I think that was also one of the issues which we faced initially. The bureaucracy, also the public officials, all of us felt more comfortable when the standard contract, as approved by everyone in the government, would be safer in a situation where people didn't know what would come about. But I think that's where the problem started, when we stopped discriminating between projects and between different project types, and started looking at putting stuff, straitjacketing everything. We have another question which is about, this is a very specific question actually. Anand Kumar Srivastav, he's also from the World Bank. He asks a very specific question. I don't think you talked about that. You did talk about having renegotiation clauses, but has the government specifically taken a decision to have a renegotiation clause in the concession with clear mechanisms and conditions, everything well laid out? Okay, this is possible. Would that be something which the government agrees on, or would it be something specific and explicit inside the contract? Has a decision been taken?
A decision has been taken to allow renegotiation of existing contracts. That decision is already taken by the government. In fact, there is already a study report which is on the website, available on the website, which shows how renegotiation can be done or is necessary to be done. What are the circumstances done. So the decision is already taken. But as I mentioned to you earlier, it will have to be fine-tuned because we have now looked at the situation where how to determine a stress project, then to assign the responsibility for the stress. Is it because the bidder did much more aggressive bidding than it should have done? Was it short of finance when they should not have been short of finance? Or is it on account of regulatory delays? If it's on account of environmental approval not coming through or land acquisition becoming a problem? In which case there is a question of assigning the responsibility. Now, what you have to remember is to reopen uh, 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 an old contract always carries a moral hazard. You have a problem because it is very difficult to then say anybody would come in and say renegotiate my contract even if it is not necessary because it has been allowed. So there is a very strong safeguard on that. One has to decide based on appreciating where the responsibility lies. Even if there is a responsibility of the developer, then the developer must take a haircut, even though to salvage the project it may be necessary to renegotiate the project. So there, I think it has the decision is there, and the principles of renegotiation are evolving. In many cases, renegotiations have been done, but I don't think we have actually reached a point where we've done enough renegotiations to be able to glean principles out of it and issue them as a guideline.
Thank you, Dr. Mayram. There's another last question. Maybe we can take a couple more. This is a very appropriate question, and we have been discussing some of the issues in financing. And Mr. Vijay Kumar from Government of Maharashtra, he has a question. In the Indian context, why is the level of participation of private sector financial institutions in PPP infrastructure projects very low? And we do know that the whole infrastructure, the PPP program of India is mostly built on financing by huge public sector banks. So why has private bank participation been quite low? Do you think it will pick up in the future? And what do you think might have been the causes?
I think it's picking up. I mean, in principle, what he's saying is right, but then you look at the size of the public sector banks and the size of the private sector banks. I mean, if you compare them, public sector banks are much, much larger in terms of both capital and in terms of their size of operations than the private sector banks. So I think what we are seeing is that more and more private sector banks, for instance, ICICI and some of these private sector banks have now been coming into, even Yes Bank has gotten into certain types of infrastructure projects which they are financing. But having said that, you must remember that infrastructure financing, because it is long term, it is seen as risky at the moment. Because of the uncertainties or volatility in the market, infrastructure markets. The private sector is much more averse to risk than the public sector is, because at the end of the day, public sector banks are seen to have somebody who can backstop, which is the government, which is the owner of the banks, does the backstopping. So the general belief is that banks shall never be allowed to fail, whereas the private sector banks certainly can have run into trouble if they give very large loans and the projects get stuck. So there is a risk perception, higher risk perception as far as the private sector banks are concerned, and so we will see as the economy improves, as the private sector banks grow, become bigger, many more of them will start doing much more in the infrastructure space.
Thank you so much. We have one last question which we will take, and very quickly. This is from Neeraj Gupta, IFC. He says, in India we design PPPs so that equity investors can bid, but equity being optimistic by nature, the bids are not appraised by the lenders. What is your view on mandating that bidders come with lenders' commitment with their bids? This is, the way some of the countries proceed. you have to indicate your financing commitments, then you put in your bid. So what do you think about this? What's your view?
I don't think that, what is being said is correct, because if you look at the financing, you need to do first, you have to expand your equity, and then the debt comes in. And similarly with VGF is disbursed with every installment of the debt. So unless you've expended the entire equity upfront, the loan will not come in. Now the question is different. Question is whether the appraisal for the requirement should have been 25% equity, or looking at the risk, the developer should have been asked to put greater skin in the game. Now that's another thing. Now on that, of course, I wouldn't be able to say much, because that is the banker's perspective. Generally, they say if debt is to equity ratios are worked out on the basis of a historical experience of the banks. So in some cases it could be 1:4, in some cases it could be 1:2, which is equity and debt. And that is purely a banker's perspective, where I don't think I would like to hazard and say it should be higher or lower. But the fact that whatever is the ratio that the bank has prescribed, equity has to be spent first. That principle is there always.
And what are your thoughts on mandating that bidders come at the time of the bid with lenders' commitments? Right now, I think that's not the case in India. So at the time of bidding, you show your financing.
But the banks will not give any commitment unless they see what project it is, how the project, what is the detailed project report, how they are looking at the cash flows in the project, what is the length of the concession. I don't think any bank is going to give any commitment upfront. In India, at least, we don't see that happening.
Thank you, Dr. Myram. And unfortunately, we have a lot more questions, but we don't have a lot more time. We don't have time at all. So before we close this session, I would like you to take exactly 1 minute and respond to one last question from me. What would you like the audience today to take away as the key message from the Indian PPP experience?
I think PPPs can work. PPPs will work. And what we are seeing, as the economy in India begins to grow again, the investor confidence comes back, you will see PPPs will begin to grow in the same manner as they had earlier, and we would have a much bigger program than we have today. So one should not lose heart. One should not begin to believe that the era of PPPs is over and that public sector spending is the only way to do things. I think if we can do sophisticated PPPs, we will have much greater participation of the private sector, much better service provision, much greater accountability in service provision for the private for the consumer or the public.
Dr. Myram, thank you so much for being with us today. Always a pleasure, and I hope the audience enjoyed the discussion. And I would like to thank everyone who listened in from about 50 countries, probably the world over, and those who joined in from the World Bank in Washington, D.C. Please do send us your feedback on the session and how we can work to improve these discussions. Also, please do not forget to join our next session in the series on April 28th, where we feature the PPP program in Pakistan. Thank you so much.
Thank you very much, Shamla.